Good evening, I'm Dan Mars, and thanks for joining us for this special KOLD News 13 programming called Keys to the Dream.
I'm Shaley Sanders. I'm a reporter and anchor here at KOLD, and you can see we have a lot of our real estate experts with us. Diane Marzoni is here. She's a real estate agent with Coldwell Banker Realty, and she's also been named 2021 president of the Tucson Association of Realtors. She's had her license for about 16 years, so she knows her stuff. Thanks so much for being here, Diane. And Dan, I'll let you introduce our other two guests.
And down in our lower left lower corner there is Jennifer Phillips, growing up in an Air Force family. She landed in Tucson in 1979, where her family decided to stay. With 3 boys of her own who've also grown up in Tucson, Jennifer has extensive knowledge of the community and what it has to offer. Her 16 years in the real estate industry has proven her to be an expert negotiator. And also joining us is Derek Holder. He serves as Regional Vice President of Summit Funding Incorporated. His mortgage career began in 2006 after a successful career in the customer service sector at AOL, Time Warner. As a Fortune 500 top 500 sales manager, Derek learned the necessary ingredients to achieve results. He's also a real estate instructor. So we've got a great panel of experts. Let's start things off with you, Diane. Just kind of give us an overall feel of the Tucson market, because it's on fire right now.
I would say that's the word. It is, I would say add to that is a little chaotic and a little emotional. A lot of folks are out there desperately trying to find a home, and the competition level out there is pretty much over the top. And I've had a lot of folks that have been able to find something, and then I've had some other folks that get buyer fatigue and give up because they just can't find a place. So it's chaos in a nutshell. And but of course, we're all here to help people, so I do the best I can. But yeah, it's a little crazy out there.
And Jennifer, your feedback as well.
100% agree. I mean, chaos and emotional chaos as well. I mean, we're seeing multiple offers. I mean, things are just getting a little bit crazy. Some of those things can tend to get a little bit dangerous without proper representation. So right now, having the right agent and lender on your side is very, very important.
And speaking of lenders, let's check in with you, Derek. How's your business?
Very much the same. And because it's so crazy busy, there's a lot of expectations that have to change going into this market. Things take longer. It's more expensive. And I think for buyers, they're having to pull out every stop they possibly can. I mean, they're waiving appraisals. They're going through bidding wars and offering money above appraised value. And you also have the added competition of out-of-state cash buyers. So it's certainly a much different market than we saw just 18 months ago.
And speaking of those out-of-state buyers, a lot of people, I don't want to use the word blaming, but a lot of Californians are bringing their cash over here. How much of the market is that?
I can only speak from my corner of the world. Diane might have macro numbers for all of MLS, but I would tell you that I certainly hear a lot more from out-of-state buyers sharing a story such as this. I'm selling my house for $1.5 million. I'm walking away with a nice pocket of cash, and I cannot believe what I can get in Tucson for $500,000, $600,000. And so for them, they look at it as they're getting out at a good time. They're cashing out when prices are high in California, and it just looks like everything's on sale in Tucson.
100% agree.
Sorry.
Oh, sorry, Jennifer. I was going to say, I know this is unfortunately not a unique story, but Diane, last time we spoke earlier this month, you were telling me that you had showed a family several homes, and they had made like 8 offers and lost all 8. And then finally they were just like, you know what, I'm done for right now. And I'm guessing that this is a familiar story.
It is familiar. In fact, that same family came back today, and we went to look at a house this morning, pardon me. And by the time I got home to make an offer for them, the agent said that there was already 4 or 5 offers on the table. It was already 30,000 over list, which was about 10,000 more than they could have done. And again, it was just kind of ripping that Band-Aid right off of that scab. And that kind of plays into the emotion part, where they desperately want to get out of the apartment. They want to find a place. They're well qualified. Derek would know that. They're well qualified. They've got all their ducks walking in a row, but they just can't get into the house quick enough because we've got folks that are coming in, and I think more than California, I think there's people coming in from all over that realize that they don't have to go to an office. They don't have to go to a brick and mortar store anymore. They can work from home. So they say, wait a second, I can go to Arizona, live a little bit less expensively, and pay cash for my house. So all of that is kind of a recipe of a real letdown for some of these buyers that are just trying to find a house for a cheap 20.
And
Jennifer,
Jennifer,
what about you? Dan
Yeah.
and I are on the same page.
Same thing. I mean, we have buyers that we submitted an offer, and we were number 21. And by the time it ended, they had 24 offers. And it's very, very frustrating. I mean, there are ways around it to make strong offers. Some of those ways, again, like I said, can be dangerous. So, you know, we do have to watch for that. But yeah, it is really difficult. And they have also kind of opted out and just said, hey, we're just going to slow down for a minute and regroup, because that cycle, that up and down cycle, it really gets to people. So we need to see more inventory on the market. And I think what's holding that back, I don't think that's so much the pandemic anymore. I think the fear is for sellers, they don't know where they're going to go. So that scenario has now changed. You know, you sell your house and then what? Yeah, you're going to compete in this market. There are ways around that. Sellers do have the upper hand. So, you know, they could say, hey, let's, you know, lease back. We don't love to do that in our world. There could be some dangers. However, as long as you do it correctly, it can be done. So there are ways around it. Talk to an agent that knows how to get around it. And certainly that will help a lot of the inventory open up and give everybody that opportunity to purchase a home.
Shaley, to piggyback on that, I was talking to a real estate agent probably about a month ago, and they said, you know, I realized that this market shifted so fast that I had to tell my clients, don't get discouraged. If you want to buy, you know, we can find you a home, but it used to be maybe we would compete and miss out 2 or 3 times. This market, it might be 10 or 12 times. But if you're persistent and you can act quickly, they are now finding more success by just resetting that expectation that it is, you know, a little bit of a fight to get to the finish line.
That's great advice.
I wanted to ask you, you know, concerns of Tucsonans who live here and them getting priced out with these rising prices in the income levels that we have here in Tucson. Is that a concern that you guys are hearing? And Diane, we'll start off with you on that one.
Absolutely. Last time Shaley and I talked, we were discussing the fact that we love our small town feel here. We love the low key world that we live in here. And I think this industry is shifting these houses. I think our average price when we spoke last time was around 400,000, which is crazy. I mean, just a couple of years ago, it was 275. So I fear that it's going to price us out. And I mean, I don't think we're ever going to be a San Francisco or something like that. But folks that want to just maybe upscale or what kind of just come here and they're just retiring from Michigan, but they don't need $1 million house or pay cash for something. They can't even find anything. So I'm fearful that if our inventory doesn't start getting up there, and we actually have more inventory this month than we did last year this month, not by much, but we do have more. We just have more buyers. That somehow that's gonna bite us in the place we don't like getting bit, and price us all out of the market. And that's a fear. I hear it from buyers all the time.
You know, I can piggyback on that from the financing standpoint. We're always looking at income and we look at relative to the house payment and we calculate the debt to income ratio. And, you know, there's still every day people that are qualified and can purchase within Tucson. I think Tucson is so unique that we have the wide range from service industry, you know, servers that are buying homes, and then we have, you know, medical professionals. So you have this huge range of income. And Tucson, actually, to its credit, has done a lot of positive things in the last few years, from, you know, moving Caterpillar here and Home Goods and Raytheon. So we've actually had a surge in positive job growth and income growth. And to my surprise, I saw that our median income actually had increased above the national average. I think you're looking at 55,000 as the national average, and Tucson actually hit about 59,000. And even though our prices have increased, you still look at it relative to the median sales price nationally, which I looked in preparation for this, and it was 350,000 as of last month. And Dan, you started off with median sales prices somewhere in that 320 range. So it's surprising for those of us that have lived here for a long time, but Tucson's median income has actually raised above the national average, and our median sales price is still below the national average. So for many Tucsonans who are here saying, "Gosh, this it's too expensive, it's too priced out," I think we're all going through sticker shock because Diane's point, it was the best kept secret, great weather, and super affordable. And now everyone's found out about Tucson, but we still have a little bit of, I think, opportunity where it is fairly priced based on those median incomes and median sales price.
And Jennifer, do you want to add to that?
I 100% agree. I mean, we've kind of always had that trifecta between the retirement community, the university, and the military. So we've always, really always had people moving in and out. We've never stopped. We've been really fortunate that way. And so, I mean, I don't expect to see some huge decline, even when interest rates do go up, but we are struggling with the inventory. But I think the inventory hopefully will pick up, but as these things are happening along with the big companies that have moved in. So fingers crossed.
Yeah. Dan, I want to ask them about the average days on market until sale. I hope this is the most recent number. For a townhouse or condo, it looks like about 10 days. For a single family home, it's looking like 13. Does that seem about right to everybody?
Yeah.
Or how?
I did a quick search on MLS for the 85737, so the main zip code for Oro Valley, between 300 and 400,000. So the last 6 months, which is what our MLS defaults to, average days on market was 6.
My goodness.
I had 5 in all of Tucson.
Unbelievable.
Yeah.
5. Jennifer, you said 5?
Yeah, we have 5 for single family homes in all of Tucson.
Crazy.
And you know what that really is too? It's not that the home's sitting on the market waiting to sell. What's happening is it hits the market and we're negotiating for 5 days. It's really not that it's sitting there for 5 days. So if you put your house on the market, you've got to be prepared. Now, that being said, you don't have to prepare to pack and move. I mean, because the sellers have leverage right now, they can play with all kinds of things, and that includes the date that they close and have to move out of their house. So, traditionally we've seen 30 days, 60 days, even 90 days, but we can push this out by 6 months if we need to. I mean, given the leverage that the sellers have. So I just hate to see people hold off in selling their home because they're afraid that they have to hurry up and rush out because they're getting an offer. These are all negotiable items. So don't panic on that part. But yeah, 5 days is where we're at. They're right in there,
Crazy.
Take or give or take.
I do have a viewer question. This is from Selma. She writes, "I'm a student about to graduate and have a lot of student loan debt. I accepted a position here in Tucson. I'm hearing a lot of people say, good luck, you won't be able to own a home." She asks, what are my hopes for a home here in Tucson? And I know a lot of people are in that same boat. What do you guys tell people like that? I guess it starts with lending, doesn't it, Derek?
Yeah, I can take the lending side. Well, I would say to the person who has a student loan question or the person who has a question about the car that they're about to pay off, everyone's situation is so unique, but it really comes down to simple math. And you can start the process by talking to any lender who can give you a free consultation and look at what it would take to get you pre-approved. Now, specific to student loans, there are some things that lenders can do to help someone that might have went through school for a long time and incurred a ton of student loan debt. One thing that we often advise clients to look into is something called IBR, which is income-based repayment. If you're in that place where you're just getting out of school and you have, a good job, but obviously you're just starting to climb the professional ladder, you could have a reduced student loan payment, or sometimes an actual payment of $0. So as a lender, I have to look at what is the payment. If the actual payment is $0 based on current income, then the lender will use that as a qualifying number. there was recently really exciting news coming from HUD or FHA. They used to make us use a default number of 1%. So if I had $100,000 worth of student loans, even if I was in deferment, I would have to count $1,000 payment against that person. And now they just cut it in half to 0.5%. So that will help more people with student loan debt qualify for more house. And they actually made that move to be in alignment with Fannie Mae and Freddie Mac that does conventional mortgage. So the short of that is it's become just recently, within the last few days, easier for those with more student loan debt to qualify. And there are things that good lenders know how to do to help you with buying power based on special employment benefits or things like IBR.
And if I can chime in there, when Derek says good lender, that's a meaningful thing right now. I would interview lenders and make sure that you're looking at a lot of different areas. I've actually written contracts where we've had people say, we're accepting this because of the lender. They're local. We know who they are. They have a good reputation in town. And so I know Derek's been very fortunate because he's been in Tucson for quite some time and has a great reputation. And so just be aware of that when you're looking for a lender, make sure, because if we're competing and we need to get, let's say, a pre-qualification form, we can call Derek at midnight and get that. Sorry, Derek, I say that out loud.
It's true.
But I can't call some banks or some, there's some institutions you can't do that with. So keep that in mind when you are looking for a home. It matters.
Hey, Dan, we have a viewer question. Do you mind if I ask this?
Yeah, please.
Okay. So this comes from Barbara. She says, what are some suggestions or advice you can give our VA loan users and them wanting to put zero down?
Well, I'd love to hear the agents chime on this, but it's definitely, I think it's actually a little bit unfortunate consequence of the market, because the VA loan is, from the standpoint of qualification, it's one of the best mortgages that you can get. Veterans served our country. One of the rewards that they get is this amazing program that allows them to do zero down, and they actually have a lower monthly payment. If I was to compare a veteran's loan options on the same amount of money, VA, FHA, or conventional, if they were not putting down, if it's an equal loan amount, they're going to have the lowest monthly payment. And from an underwriting standpoint, VA is most flexible. Here's the issue that we're running into, though. When sellers are getting 21 offers, as Jennifer mentioned, they start bidding against one another. And that VA, that veteran says, well, I thought I have to go zero down. I have this benefit to go zero down. What do you mean? And if that home doesn't appraise for that offer, that veteran might not have the $5,000, the $10,000, the $20,000 to compete with somebody who was doing 30% down that can offer that, or even more of an aggressive offer would be that Californian or that out-of-state buyer who's just coming in cash and they don't care what the house is appraising for. And so that's where I see, from the financing side, veterans at a disadvantage because they can't compete in the bidding war that goes up with multiple offers.
I just dealt with a VA buyer and they came in with a very strong offer. And I think we were one of 7. And they decided to come out of pocket for an appraisal pitfall. So they'll come in with the difference, kind of like what you're saying, Derek, is coming out of pocket, and they won it. And when I went back to the agent, I asked him whether or not he had laid these down with his seller, who is an investor, to compare whether it was, conventional FHA, VA cash, and if that was the decision, and did VA make any kind of play on his sellers' minds about whether they would take it. And he said it wasn't at all. It was the idea that if the house didn't appraise, that there would be a cover for them that the seller was still going to close, or the buyer was still going to close. So it's interesting, this unique situation we're in, that people are taking those chances.
And Diane, I think it's awesome that you negotiate that way. To any veterans that are watching this, it's actually a competitive advantage that you do have. You just have to change your mindset. So people that are doing cash or conventional offers, they're already putting down 5, 10, 15, 30%. And then what they're doing is they're using whatever they've saved to negotiate this extra cushion, as Diane mentioned. And veterans are usually in the mindset of it's zero down, so I'm not going to offer anything for the down payment. But the fact that they can come in at zero down, and if they do decide they want to compete by bidding 10 over, they're actually in a financial advantage over somebody else who has to do a minimum of 5 or 10% down and then offer, you know, a $10,000 appraisal guarantee.
Yeah.
You know, with the prices going up as rapidly as they have, a lot of people are making comparisons to 2008, the bust. I just wanted to get each of your opinions on that. I mean, is that a concern? Is it a worry? Can we even compare? Is this apples and oranges? Can we compare the two differences?
My worry, pardon me, my worry is that if folks come in and spend or go say 30,000 over what the list was, because the list price, hopefully you're working with a realtor that understands the market, understands the neighborhood, and they're pricing the house correctly. And now people are coming in and it's $20,000, $30,000 over list and they're buying it. And maybe they're waiving, pardon me, maybe they're waiving the appraisal or maybe they're not. But in 5 years, people typically move every 5 to 7 years. Is what's that market going to look like in that time frame? And are you going to be able to turn it around? And when you call me to go list it again, because you're always going to do that, right? We're going to have that difficult conversation about whether or not the market actually stepped up or kept up with what you are paying for it. So it's a concern, and it kind of goes to what Jennifer was talking about, the danger of people needing a home and doing these really crazy kind of, giving up things. It's like, what's that long term look like? And that's a concern. And I tell people, if I had a crystal ball, I would be really wealthy. Really wealthy.
Diane, I use the same expression. Who knew?
Yeah, who knew?
That's my same, I think it's a great question, Dan, and it's actually one of the questions that we're forced to answer for our clients all the time. And I say the same thing Diane says, if I had a crystal ball, I'd probably do something else. But Dan, to your point about 2008, here's what feels different. I was in lending in 2008. I saw the different loan options that were available at that point in time, and there were a lot of things where you didn't even have to verify income. The allowances, meaning the amount of debt you could take on, was sky high, and lending really tightened up after 2008. And so what we have from a lending standpoint, the people that are buying houses, they're qualified with the credit score, they're proving their assets and income, they are buying a house that's affordable to their income levels. And so from that standpoint, I don't see any of these loans going bad. Now let's talk about, well, do you think I should spend $5,000 or $10,000 more than the home's going for right now? To Diane's point, again, we don't know what the market's going to do, but I can tell you two things to look at. Appraisals are usually based on looking at comps that go back 90 days or 6 months. So you have a lag. Just look at somebody that had the opportunity to buy 6 months ago. They'd be very happy if they paid 5 or 10 grand over to where the prices are today. It's also with the demand that Tucson's receiving, again, jobs, population growth, we're projected to have about a 3 to 5% annual appreciation over the last few years, which would put us at 20%, 25% over the next 5 years. And that was, when you look at what's actually happened this year, those forecasts have actually been 18% versus the 5 or 7 that was forecast at the beginning of the year. So we're blowing past those numbers. So I tell clients simply this: if you're buying the house and it's affordable for you, meaning that this is the home that you plan on staying in and you're not putting yourself at risk financially, you never sell an asset in a down market. I bought a home in 2005. I watched that same house go from 160 down to 110 during the crash. And because I was not buying outside my means, I held on to that asset and I sold it at a time several years later where that house went all up to 190 in value. If you look at Portland, it reminds me of the story of Tucson today. Many people went to Portland because it was cool, it was unique, it was affordable, and it continued to be cool, unique, and affordable until prices continued to climb. And now they're passing out legislation where the mayor is saying we have to build multifamily affordable housing because the demand has not stopped. So for someone who's thinking maybe I should just wait, maybe the time is not right, you might be right. And if that's reading your crystal ball, maybe prices pull back 10%, you buy a year from now and you look like a genius. Or this train continues on and that same house that you would have got today for 300 is going for 400, and you're thinking, gosh, I should have pulled the trigger when I saw Dan and Shaley on the news show talking about this crazy market, and it's only going to get crazier.
It's kind of like buying stock in Apple, you know, years and years ago.
Yeah.
I mean, it's the same thing. And you know, are you going to buy and hold, or what are you going to do? What does your future look like? And I think that's what Derek's saying is, you know, you've got to look at what your plan is for the future. And if it's long term, then that might be a great thing. Even short term might be a great thing. Keep it for a year. And if interest rates are still low, you might be able to maximize on the values going up. So it's really individual.
Yeah, we're building less than half of the homes that we're supposed to right now for keeping up with household formation.
And plus, there's the building costs. I mean, the cost of lumber, that's a huge issue as well. Mm-hmm. You mentioned interest rates. How are interest rates, Derek, and are they holding steady? Talk of them going up a little bit. Where's that stand?
Yeah, great question. So your interest rate, there's a national average that's put out every single week. The average as of this week was just a smidge above 3%. Where have we been all year long? We've been in that upper 2 to 3%. And that is one of the silver linings in helping with the affordability. You go back 3 years ago when houses were less expensive, but you also had interest rates that year in 2018 that ranged from 4 to 4.75. So interest rates are certainly helping take a little bit of the heat off. You know, I can only go off of forecasts from other economists that have said, you know, we're going to see between 3.5% this year. So it's projected that rates will go up. That will certainly add to this, you know, the increase in monthly payments. What I can tell you is that rates at 3%, your cost per thousand is $4.21. So every 100 grand is costing you about $420. And that is a positive of the market is money is cheap.
But that's also what's creating part of this crazy market, right? I know I've spoken with a lot of first-time home buyers, and they're like, "Oh, the interest rates are so low. Now is the time to buy." And then they're like, "Wait a second, why am I paying, you know, $20,000 over asking?" And I do kind of want to ask Jennifer and Diane, what do you do? Diane, I know when we chatted for a story that aired earlier this month, you were saying that you like sometimes have your offer letter like pulled up in the car, ready to go. That way you can try to have a chance at getting this home for your clients. I'd like to know, Diane and Jennifer, what are you doing to you know, get your buyers a home?
Well, number one, it's get your ducks walking in a row. So just like we're talking about the competition, like Derek's saying, the fact that you have already sat down with a lender, done a complete once over with your income, and get your affordability price. Like, what can you afford? What is comfortable for you? Get that in writing, get it set, and then get in the car and go and start trying to, you know, beat somebody to the front door. Because if you get to the front door and you say, well, I love this house and I'm ready to outbid everybody here, but I don't have a lender, you've got about 16 people that have already looked at it, that have already talked to a lender. So what I say is get all of your ducks walking in a row first. And one of those is going to be your lender. One of those is going to be, what is your plan B? If you can't find a house, do you have a rental? What's plan A? What's plan B? And then once you have all of that, hire a realtor, a good one, and then get in the car and go shopping. And then I think lastly is maybe even, you know, some brokers I've spoken to are not a real big fan of the love letter. I think that you can provide some information about your buyer and how they're excited and what they see in that family, you know, living in that home. Some brokers don't like you to do that, but it's also something that might set you apart from another buyer.
And Jennifer?
We've actually had that happen many times where people have taken our offers because we were able to talk about the buyer. I mean, we get permission, we get written permission, we make sure they approve it, we follow all the guidelines. And as long as you're doing that appropriately, you can really paint a picture of who people are. And, you know, it's an emotional buy. Usually it's not always emotional on the seller's side, but sometimes it is. They care who's coming into their home next and taking care of it. Sometimes they don't want that to be an investor. Sometimes that does matter to them. So that cash deal may not be as attractive as, say, the VA buyer, right? So it can happen if you position it properly. And I love what you said about making sure you talk to a lender first. 100%. Not only talk to them, have all your paperwork turned in so that when agents are calling lenders and saying, hey, is this person truly pre-qualified? Where are they at? Is everything ready to go? Are we really going to close on time? They can say, yes, we're prepared 100% to close on time. It really, really matters. It makes everybody's life easier, including your own. So, and then when it comes to writing those offers, like Diane does, I mean, you've got to be prepared. You know, everything's templated, ready to rock and roll. And there are little things you can do. I mean, people are getting very creative, and I would caution that a little bit. I mean, waiving appraisals, you know, talk to your agent. Again, have a fantastic agent that is well versed in this market. That is so, so very important right now, that can negotiate on your behalf and navigate through all of this. It's not as easy as people think it is. We're on the back end doing a lot of things that people have no idea about, right?
Amen, sister.
And so, you know, knowing what to do, and make sure you have that information. If you have an agent that says, oh, let's just waive the appraisal and hope for the best, know what that means for you, and know what that means for the seller, the buyer. Same for inspections. We're seeing that people are waiving inspections. That doesn't mean that they can't do inspections on the property. They're just waiving the right to retrieve the earnest money back should they decide to walk away. Another thing that we're seeing is hard money going down for earnest money. And basically what that means is you're giving that money away, whether you walk away or not. So make sure that you know what's happening in a contract. When an agent's writing a contract for you, make sure that it's very well defined and that you understand every aspect of it. And I know Diane is fantastic that way. She, you know, gives all the disclosure. She gives all the information. She's got information every which direction. So, and Derek too, that's our job. That's what we do. So that's why I say interview agents, make sure you get the right person to know what they're doing, and same for lenders.
I'd like to emphasize two things that you said. On the lender standpoint, we do get interviewed constantly by the listing agent. So if you don't have your paperwork ready, that's going to make your offer not look as attractive, because that listing agent's calling and say, hey, you're one of my 10 offers. Have they turned in their bank statements? Do they have their pay stubs? Does everything look good? So both of you guys emphasize that. I can't stress that enough. And in terms of, should I waive my inspection, my appraisal, those have financial consequences. So if you're a buyer thinking about that, talk with your lender, and we can walk you through what the best case and worst case means for your bottom line.
Yeah.
I wanted to ask you real quickly too. I mean, buying a home for most of us is the biggest investment you'll ever make. And now couple that with the stress and just the chaotic scene that we're seeing right now. What do you tell people who are looking to buy? You know, need to step back, take a deep breath. What do you have to? Do you find yourself kind of giving some advice that way?
I remember when I got my license in 2004, and Nikki Hawley said to me after my first deal, I was in the middle of my first deal, and she said, oh, you didn't know that you got your real estate license and your therapy license at the same time? Mm-hmm. So what I would say to a buyer, and I try, well, number one, I'm going to educate them on what's going on. Let them know what kind of chaos we're dealing with. And then I'm going to tell them to be patient. And then what's probably even harder to do for most folks is to take the emotion out of it. Not only on the buy side, but on the listing side too. People get very attached to their houses. So when they're selling and people are asking for repairs, all of a sudden they're thinking that somebody's telling their house is a piece of crap, right? And they're like, get all upset. It's like, no, let's take the emotion out and really look at the kind of bare bones of it. And then as a buyer, I would just say, be patient and listen.
Yeah, I 100% agree. And, you know, I think we do a lot of the guiding on how people react. And it's just like a kid, you know, however you deliver information is how they receive it, right? So if we're explaining, hey, this is what could happen. This is what we're seeing. And as long as you're patient, you let me do my job, you know, we'll work through it. And, you know, agents have gotten infinitely better lately about working together toward the greater good of making sure that we get this deal closed. We're on the same mission. And I did a lot of interviewing with agents during the pandemic, and we talked a lot about that. And, you know, we're all in this to win, right? So, you know, working together is absolutely imperative. And instead of getting frustrated and having that conversation with your agent going, why didn't you get me this deal? What happened? You know, just have a little patience with them. We're trying. I mean, we are trying hard. I promise you. We're not sitting around hoping for the best. We're on the phone. We're working hard to make sure that that happens for you. So I think we set the stage to make sure that everybody's in a good place, to educate everybody, and then everybody just stay calm, work together, and we'll make it happen.
Yeah, agreed.
I think the two words there I'd highlight is exactly, it would be education and patience. And Dan, to your point, in terms of the feeling, a lot of the feelings of anxiety or fear just come from the unknown. So I think just preparing people and educating them with numbers and showing the market data that you guys have talked about will give them enough information to make the decision that's best for them and their family.
Absolutely.
Yeah.
Shaley, any more questions? Any viewer questions come in?
Let's take a look here. Some people were talking about how because of the crazy housing market, now people are trying to rent and then the price of renting is going up. And so I think it's just people are just frustrated. But I mean, I think we could probably talk about this all day. I can't believe we've already been doing this for like 39 minutes. I'm like, oh my gosh, it's already after 7. I think that that's some good information though, you know, and people are not alone. And so if you're struggling, you know, it's like you're not the only one, and it's crazy. And I do think that that's really good advice, is you just have to change your expectations and go into that with kind of that perspective. I think we should do another one of these. That's what I think.
I think so too.
Absolutely.
You guys are providing us a wealth of information. We really appreciate your time. And I guess just the bottom line is, if people are out there looking for a home, be patient, have a good agent, and make sure you got all your ducks in a row with your funding, and good luck. I mean,
yeah.
So it's scrappy out there.
Yeah, you find that crystal ball, give me a call. And
that's right. We're all willing to jump in the ring with you, just so you know.
That's right.
Jennifer Phillip, Diane Marzoni, Derek Holder, thank you so much for your time. And I think we really should discuss doing this again, because as quickly as things are changing and the rapid pace of all this, I think we could almost do this on a weekly basis. But we'll definitely get in touch, and I think we need to keep abreast of what's going on out there. So thank you.
Okay. Fabulous.
Thank you so much.
Thanks, guys.
All right,
Thank you. Thank you all.
Yeah. Bye.
Bye.
Bye.